my baby, got me staring at you. So I'm crazy, won't you bend that back for me? We won't stop, got your feet both locked. You get to fly with me.
Hey guys, welcome back to the daily crypto forecast. I am finally back to my little home studio and we can go back to normal videos now and show you the charts behind me here. I'm very excited to be back. I finally was able to see my little babies and yeah, very excited to be back here guys with you. If you're watching this live from the premiere, go ahead and say hello on the chats. Don't be shy. I'm gonna be there reading all your messages guys and answering your questions. And if you are not watching this live, then go get your coffee and enjoy the video. Today we're going to be looking at the Bitcoin BTC versus the US dollar. I'm going to run over all the time frames very quick, and then I'm going to be looking at the Ethereum versus the US dollar. One of the premium members has been asking me to look at the Ethereum chart. Usually when members ask me to look at specific charts, I usually take a picture with my technical analysis and some explanation and share it there in the premium groups. But in this case for the Ethereum chart, there's quite a few things to point out here. So I decided I would make a full video and everybody gets to benefit here on YouTube. So let's get into it. All right, so here we have the Bitcoin versus the US dollar from Bitstamp as usual, and these are the monthly candles. So guys, we are bouncing on the 50-month moving average. I have been saying this since forever. For me, this qualifies as a bounce on the 50-month moving average because it got close enough from it. So it usually, you know, it doesn't always has to actually touch the line exactly and then bounce. Sometimes it'll do that, sometimes it'll get close to it, sometimes it'll go a little bit below it. But for me, this is a qualifying bounce on the 50-month moving average, and therefore I expect to have some green candles on the monthly chart anytime soon now. I mean, there's still 2 weeks until this current candle closes. Anything can happen in these 2 weeks. This can close all the way up here as a green candle. It could close like it is right now, or it could close again near the 50-month moving average, and I would still be expecting a bounce on the 50-month moving average. So nothing really special here. I'm expecting a bounce. Of course, nothing is 100% guaranteed in charts, so we could actually break down and capitulate here. I just find it unlikely, having in consideration the amount of support that we have at $3,000, which is the 50-month moving average, is this really significant peak here at $3,000, and it's also the 200-week moving average, which we're going to be looking at it right now. Weekly candles, and as I just said, we are bouncing on, I mean, we did bounce already on the 200-week moving average. Now the bounce doesn't look that strong, but still it's a bounce, and we still have all this support at this level. We have the 200-week moving average, we have the 50-month moving average, and this most significant peak from 2017 here at $3,000. After we hit $3,000, we rejected very heavily and we went into a couple of months of bear market here within the macro bull market. So this high is very, very significant, and it's very strong support for right now. So I doubt it's going to break in the downside anytime soon. Now I do expect this level to be broken in the future, just not yet. I think we're gonna bounce first and go and revisit the 20-week moving average, which is the red moving average here. I have been saying this in every video, but if you're new here, I'm gonna repeat it for you. Every time the price gets too extended from the 20-week moving average, which is this red moving average here, every time the price gets too extended from it, it'll go back to revisit it at some point. So you see it gets rejected every time at the 20-week moving average, and then eventually when it gets too extended, like in this case, boom, back up to it. Here it got very extended, boom, back up to it. Here it was a little bit extended, boom, back to it. And then here we got absolutely rejected from it, and we are very, very extended from it. So I expect to revisit the 20-week moving average at some point before breaking down. It happens also in bull markets. You look how perfectly the price touches the 20-week moving average every time it gets extended from it. So it happened here, it got super extended, boom, back to it. here got a little bit extended, went back, and here, boom, it finally bounced on it very hard. It got extended, boom, back to it again. Here got extended, boom, back to it. Here again, boom, back to it. Here, super extended here at the $3,000 level, and boom, it took 2 months or 1 month and a half, but it went and touched it. So the same thing could happen now. It could take 1 month, 2, whatever, whatever long it takes, but I expect this to go and revisit the 20-week moving average before getting heavily rejected again. Daily. So on the daily, again, I have been showing these patterns. This triangle broke in the upside, but then it was a fake out and it came back down. So we are bouncing basically between support and resistance, which is between 3,400 and 4,300. You see the blue lines here. So I expect this to probably be consolidating with this much volatility until we touch this diagonal resistance line, which it goes through around the same level with the 20-week moving average. So they are downtrending around the same speed, this diagonal trend line and the 20-week moving average. They are downtrending at around the same speed. So I expect the price at some point to go and touch these two lines, and only from there get heavily rejected. Now, again, it's not impossible that we break down here, but as I said in the beginning of the video, I find it very unlikely that we're gonna break 3,000, significantly and capitulate that fast. I just don't think this is going to happen that fast, but hey, it's a possibility. It could happen. So if you're swing trading, always use the stop losses, and if you're buy and hold, then you do nothing here until we actually break down and capitulate. If it happens, and if it doesn't happen, then you can start maybe accumulating on support here near the $3,000 level. 4 hours, absolutely nothing new to say here. I have been showing the 4-hour chart in every video, so I said it yesterday, I'll say it very quick again. If you're swing trading or doing the short-term trading, you can attempt to buy support and sell resistance, buy support and sell resistance. So what is support? Support is either 3,500 or 3,400 here. So when the price approaches these levels, you buy. You should have bought already here, and now you wait and then you sell when it approaches resistance, which is between 4,200 and 4,300, more or less. That's nothing else to see here. Let's move on to Ethereum. Ethereum monthly, this is from Bitfinex, so there's not that much data here. We cannot see longer moving averages, but we are clearly bouncing. One thing I want to point out, very important in this chart, is the volume. The amount of volume here on this low, it was unbelievable. If I look only at volume, I would say it's possible or even probable that this was the bottom. Now, volume is only one single indicator. Ideally, you don't trade based on one single indicator. You also have to look at levels of support and resistance and many other indicators, but the volume looks very much like capitulation, bottom of the market volume. We will see what happens. There's not much I can say from this chart other than we are bouncing, and I expect this bounce to continue. Let's look at the weekly. On the weekly, actually for Ethereum, we did already reject at the 20-week moving average, which is a very a strong moving average, is the one that I was pointing out for Bitcoin, and you see how it works perfectly fine as well on this chart. When we are in a bull market, when it gets too extended from the 20-week moving average, it'll come back down to revisit and bounce on it. It happened here once, it happened here twice, and it was just like kind of following the moving average until it got this last crazy run up, and then it went below. When we actually had on this second crash here at the top, we bounced hard on the 20-week moving average as well, but it didn't hold and it broke because obviously this was the top of the market. Once we get below the 20-week moving average and we start closing below it, then we are in a bear market. But look, when it gets too extended, it'll bounce, boom, back up to it. So it always goes back up to the 20-week moving average, and here it happened already. I was expecting it to get just a little bit higher, to touch the 20-week moving average and maybe go over it a little bit before rejecting, because I was looking also at other levels of support and resistance. and it looked to me it was going to get a little bit higher before rejecting, but it didn't. And this again, as I said, for the Bitcoin monthly, this qualifies as a bounce of the 20-week moving average because it got close enough from it. So this is a qualifying bounce. It bounced off, it rejected, and now we will see. We're gonna have to look at smaller time frames to try and estimate shorter term movements. Daily candles for Ethereum. So I have been pointing out this as well in different charts. We just had a cross with the 20 and the 50 moving averages. The 20 and the 50 simple moving averages are the most standard moving averages, which not all, I shouldn't say all, but many traders that trade based on moving averages use the 20 and the 50, and they are especially important on the daily chart because for swing trading, that's your buy signal. When they cross bullish, you buy. When they cross bearish, you sell. When the 20 and the 50 simple moving averages cross on the daily chart, that's how you trade the swings. So if you would have done it here, you would have sold here or short here when they crossed bearish. The cross was exactly at around $600. You would have held all these until they crossed now at $122, the level of the cross. So look at how profitable this short would have been. So that's what I'm saying, guys. The 20 and the 50 moving averages are standard for every single time frame, small and big, but they are especially important on the daily because that's what swing traders use to to buy and sell when they cross on the daily time frame. So anyways, it crossed bullish recently, so I expect a swing in the upside. Now we had a really long swing in the downside now that lasted months, since May 2018, since they crossed here up until now. So it lasted several months, and now I expect, even if it's only a few, but I expect a few months of the crypto markets to bounce back up before rejecting again. In any case, we are still way below the 200-day moving average, which is one of the main signals that define a bear market. When the price is above the 200-day moving average, we are in a bull market, and when we are below the 200-day moving average, this is defined as a bear market, along with other signals. It's not the only signal, but it's one of the main signals that define a bear market. So we are below it. Maybe we will be bouncing here until we touch it and then get rejected. In any case, we won't be confirmed out of the bear market until we are actually above the 200-day moving average and closing above it, not just go above for a day and then come back down, or for 2 days. No, we need to start closing above it and bouncing above it, confirm that it's not a fake out, and then that's one of the main signals that would define that we are over with the bear market. Also, the diagonal resistance line. So see, I still have this arrow here from my one of my previous analysis. So I was expecting the price to touch this line before rejecting, but it wasn't able to do it, and it rejected earlier because the 20-week moving average was very close from this high here. So we had a double top and rejected. However, guys, this is another trend line, by the way. I draw it just joining the last two highs. So this high here and this high here, you join them and then you extend the line, and this is the line. We're getting rejected here again. Let's see if we can get above it. I still think, guys, we are bouncing here. I don't think we're gonna break previous lows. Of course, nothing is impossible, but I think previous lows won't be broken anytime soon. Even if we go retest them or get close to them. I mean, if we retest previous lows, it's gonna start getting a little bit dangerous. But guys, what I expect in the worst case scenario, I expect this to go sideways with volatility and until we touch, these main resistant trend lines that we have all across, different coins. I don't think we're gonna be capitulating again. We just capitulated too recently. I think we are in the process of bouncing. And the volume, again, guys, I was gonna forget, the volume is one thing that has me really paying attention to the Ethereum chart. This volume here, this volume here, when we were falling, this qualifies as a capitulation volume. Is all-time highs in volume, guys, even higher than when we were in a crazy, bull market. It's higher than that. Yes, it didn't happen exactly at the bottom. I don't care. It's close enough, and it's just really high. It's impressive high, this volume here. It looks to me like bottom of the market volume. Now, I'm not calling the bottom. If this previous low breaks, and it breaks decisively, not just, a double bottom, so to speak, if it breaks violent and with volume, then the next target, it's probably going to be between $50 and $60, which I have been pointing out for a very long time as well. But we'll see. Maybe this low here will hold. I mean the volume is looking great, and this recent bounce is looking amazing. How big was this bounce? This was a 100% bounce. It's a huge bounce. How much it corrected? Let's use the fib. It corrected exactly to the 61.8. So let's see if this one holds here. We might be doing higher highs from here, or at least go up again, bounce again, maybe a triple top or something like that. And if not, guys, as I said, for me, the worst case scenario is we go sideways here with volatility until we touch this line, maybe a 200-day moving average, and then reject later on in the future, maybe in a couple months. But I expect this bounce to continue, or at least go sideways. And the least probable scenario, at least for me, as I read the charts, the least probable is that we break previous lows and we capitulate. That's what I give the smallest probability, but of course the probability is there. So if if that's gonna mess up with your with your finances, you need to take that into account and use stop losses. And finally, on the 4 hours for Ethereum, the 4 hours doesn't look that great, to be honest. Let me just delete this because we don't need it here, because it's doing kind of like a head and shoulder bearish pattern here. We'll see, guys, if the 61.8 doesn't hold, which is the one that's held in this bounce and in this bounce. If we don't start up trending from here, which I still find pretty possible and probable, because as I said, I showed the bullish cross on the 20 and 50 moving averages, so I think we are bouncing actually here. I think most likely we're going to continue to bounce here and get above this diagonal resistance line. However, if the 61.8 doesn't hold, which is at the level of $116 more or less on Bitfinex, if this one doesn't hold, then very likely we're going to the 78.6, which is exactly at $100. So the 61.8 is at 116. If this one fails, then the next one is going to be at around $100, and we would still be bouncing, on bigger time frames, on the monthly, on the weekly. I think that's, even if we come back down to retest these levels here, we can still be bouncing here on bigger time frames. I expect green candles on the monthly chart anytime soon, to be honest. Maybe this current candle will be a red candle, but not too big, and maybe we will start to see green candles from next month. Things are happening slower now these days, but as I said, we are bouncing on bigger time frames, so I expect a little bit of relief, and I find unlikely we're going to be breaking previous lows. But of course, again, be careful out there. If it's going to mess with your trading or with your finances, always use stop losses. That's what I got for you today, guys. Thank you very much for watching, and I will see you tomorrow. Bye.